What is up, everybody? Cameron Lombardi back here with another stock market video. Today we're going to be talking about how to deal with red days, how to just watch your money float right out the window. Nah, just kidding, guys. But there are, this is part of the game. The stock market moves up, it moves down. This is just how it goes. It's something to get used to. So you can see here the S&P 500 is down 1.86%, NASDAQ 1.64%, and the Dow Jones Industrial Average down 2.29%. Let's look at how the portfolio held up compared to this. So as you can see, guys, we are down today 1.29% or $222. It looks like a lot of money, $222 in one day. And, it kind of sounds like kind of a big loss there, but let's put this into perspective a little bit. So let's take a peek here at the SPY ETF, which is the S&P 500 ETF. So as you can see today, it was down $6.39, about 1.85%. But let's look at the 5-year chart here. So if you're looking at this 5-year chart, here's where we are today, right? See this little dip right here? This is where we are today. But over the long term, guys, look at this pattern. Right? Nice ascending pattern here. There's ups and downs, as you can see. Every year, every few months, there's ups and downs. That's just part of the game. So today is just another one of those days. As you can see here, it's coming back down a little bit. So what's the best thing to do? How do you cope with these days? So honestly, guys, the best thing to do during these days is look at the market as a discount shopping store, right? You're walking into your favorite store and the item that you've been wanting is now on sale. So let's take a look at Apple here. Apple is something that I've been buying into. I'm trying to get to 100 shares to start selling covered calls and making passive income every week. So Apple was down not much today, actually. It actually kind of ended even on the day, as you can see. But at one point today, it was down almost 2%. And luckily, I was actually watching the market around this time, and I was able to buy a couple shares here. I'm up to about 39, just over 39 shares of Apple now. So imagine you're walking into the Apple store, right? And you've really been wanting the new iPhone. Well, now, guess what? The iPhone's on sale, right? That's the same way that you want to look at red days in the stock market. A lot of people, when they see red, they say, "Oh, sell, sell." I don't want to take any more losses. Well, guys, that's not actually the right attitude to have, because then when you see all these stocks coming back up and they're hitting their highs, people are trying to buy in at the top, and then it comes back down, they get in trouble, or they just don't get in at all, and you miss out on all the gains. So actually, red days are the best time to position yourself for the future for the stock price to go up. So let's look at another example here. Let's look at Apple's 1 week. For the week, it's down $1.37. For the month, it's up $1.37. 3 months, it's up $20.42. 1 year, $53.01. And over the last 5 years, we're actually up $85.34, which is 289%. That is ridiculous. So as you can see here over time, right, there's ups and there's downs. There's ups and downs with Apple, right? So as you can see, if you're buying in at these points, you're positioning yourself to make some good money in the future here, right? Now it doesn't have to be every day. You can dollar cost average each week. You can dollar cost average each month. It just depends on what your goal is and how much you're looking to acquire. So let's go back to the portfolio here, guys. Kind of talk about what's going on currently, what I'm looking to do, the moves that I'm looking to make. So today is October 26th. It is Monday, and we have a lot of big things coming up this week. Number one being it is a huge week for stock earnings, which means each company is going to report how they're doing, what their financial sheets are, how much money they've made, any upcoming big projects. So this is an important week because we have a lot of big earnings. We had Google today after hours. Tomorrow we have a lot of big players, Pfizer and 3M. And you can see here towards the end of the week, we have a lot of big companies reporting earnings. We have Visa, Sony, Apple, Amazon, Facebook, Spotify. And these are companies that are big enough that they will affect kind of the whole market and how they move, because these are like the cream of the crop stocks right here, and if these companies aren't doing well, that kind of puts doubt into investors that the stock market as a whole is not doing well, or vice versa. If they're doing well, then it's likely that the stock market will have a green day. We also have elections coming up, right? So next week we will learn the results of the presidential election, and this is a very, very highly anticipated election. And personally, I'm just kind of holding some money on the side here. You can see out of my whole portfolio here, I have almost $5,000 in buying power, which is close to a third of the total portfolio. So I'm kind of sitting on the sidelines and watching what happens. It could go either way, honestly, but this is a very, very, there's a lot riding on this election, and the stock market can move a lot. So currently, I'm just slowly putting more money into Apple. I bought a little bit more today, trying to get myself to 100 shares. And I'm also putting a little bit more into Realty Income, which is a nice REIT. They pay great dividends every month, which helps to compound and get even more shares. So we will continue to build up this position as well as Apple. And once the elections are over, I'll definitely be putting in a lot more and being a lot more aggressive. So it'll be fun to kind of see how the portfolio does with me getting a little bit more aggressive with investing here. So let's just go over a couple of the current plays that I have right now. So I'm still selling a call on Jets here. It is currently worth $13. I sold it for an average credit of $25. So far I've earned 12 of that $25. If I want to buy it back, I could buy it back for 13. I also have a covered call on SPHD for the month. So I'm getting an extra $40 on top of my $15.50 dividend that I'm receiving for SPHD this month. And again, I sold this call for around $40 and it is currently worth $33. So if I wanted to buy it back now, I could for a small profit, but I'm going to see it through. So that's it for today's video, guys. To wrap it up, red days are nothing to be concerned about. It's just part of the game when you're investing in the stock market. And these are actually days that are good to buy and build your positions on stocks. It's better to buy when stocks are low rather than trying to buy when they're at their highs. If you guys did enjoy this video, I'd really appreciate just taking 1 second and clicking that little thumbs up button. It really helps me to grow the channel. Also, leave any questions or comments that you have below. I really appreciate that. If you guys do enjoy these videos and you want to follow along the journey and learn something along the way, press that subscribe button. Watch each video as they come out. I'm going to be trying to put out at least a few videos every week here and just bring you guys along with my investing journey. Also, the first link below in the description is a link to download the Robinhood app if you want to get started investing in the stock market. This is a super easy, user-friendly app, and if you click on that link, you'll get a free stock for signing up, and I'll get a free stock for signing up, and I will personally thank you on the next video. Thank you so much for watching, guys. I hope everyone has a great night.